Following on from the FCA's fair value work, in September 2023, they issued a warning to guaranteed asset protection or gap insurers over the value their products offered, suggesting that they felt it was unlikely the products provided fair value in line with their rules. The situation moved on last month when the FCA requested a temporary suspension in the sales of gap insurance. There have long been rumblings from the FCA around concerns they have that customers are not receiving fair value, particularly in respect of gap insurance and also premium finance. While they continue to consider premium finance, a line has been drawn in the sand for gap insurance providers with the request to stop providing cover. On the 9th of February, the FCA requested that multiple insurance firms, which collectively represent 80% of the gap market, temporarily suspend their sales of gap insurance. This is a proactive step on the FCA's behalf, intended to address their concerns related to the fair value that these products provide customers. Having been keeping an eye on this for 10 years, the FCA's analysis has shown a significant disparity which they feel must now be addressed. The data shows that only 6% of the premiums paid by customers for gap insurance are actually paid out in claims, and this has fallen from the 10% indicated following the FCA's market study back in 2014. The FCA has also found that some insurance firms were allocating a whopping 70% of the premium value as commission to the various parties involved in selling gap cover. With these numbers, it's easy to see why the FCA has concerns about the true value gap insurance provides. The insurance firms involved have agreed to pause sales and are committed to making the necessary changes to the gap products. Their aim is to enhance the value proposition for customers, which will align with the FCA's regulatory requirements. The FCA will continue to engage with other firms also operating in the gap market. Their objective is to address fairness concerns and improve the overall value customers receive. As you are already aware, fair value is a cornerstone of the consumer duty, being one of the 4 consumer outcomes. The action taken by the FCA in respect of gap insurance is a reminder that you must ensure your products are providing fair value, that they're meeting the customer's needs effectively, and that you are delivering good outcomes to your customers. It is also a reminder that the FCA is asking firms to produce their data in respect of both their fair value assessments and their consumer duty monitoring. So make sure you've got this in place before they ask. In summary, this intervention by the FCA seeks to rectify existing disparities, enhance transparency, and ensure that gap insurance truly benefits customers. By encouraging these necessary changes, the regulator aims to create a more equitable landscape for customers. If you have any questions about this edition of In the Loop or want to discuss any compliance matter, please don't hesitate to get in touch.